right. Let's get my stuff up here. Good morning, everybody. Busy this morning. Had a couple things to do. Let's see here. I'm just looking at my slot for later today. Looks like I'm on Trader Nick's stream at 9:45 a.m. Central Standard Time today. So that's 10:45 New York City time, Eastern Standard Time. That's when I'll be over there. But busy morning. I did get a reply back. I was doing some work, for this company I told you guys the last week or so that I was applying for. So it looks like they want me to reply or to meet with their news desk managers tomorrow. So that's exciting news, guys. Looks like I better shave and get ready for that, right? So that'll be tomorrow. So yeah, I was just in the middle of communicating with them, but still choking down my caffeine. So what do you guys think? What'd you do over the weekend? Did anything exciting happen over the weekend? I don't know. You tell me. Was it just another boring humdrum weekend? Nope. Not at all, guys. We had some action. You guys know this. Everybody in the world knows this at this point. Talking about some action over in Iran, Israel, gosh, all the Middle Eastern states. Just a ton of bombs got, thrown around. I think it was 900 on the first day alone by the U.S. I don't know how many from Israel, but yeah, we have one less piece of evil on this earth, guys. Actually, a lot less, because I know there were over. Last count I saw was over 40, maybe even over 50 of Iran's security/regime officials were taken out in that first couple days, really. So yeah, guys, this changes a lot of stuff. This changes a lot of stuff in the markets. A lot. It gives us things to focus on. It gives us things to steer away from. Good morning, Zambezi. Gives us stuff to steer away from and to watch. So I want to show you guys what it looks like on a chart. Let me get my chart shared. When a big geopolitical event happens over the weekend. This is important for everybody, especially if you're a newer trader. If you've been around a while, you know how this operates. But you know what? We really haven't had this many big geopolitical events like this in the last, not that many, I would say, over the last decade to this extent. Let me get connected over here real quick. But this will be a good visual to show you guys what happens with my alerts, meaning my supply and demand zones, when we have geopolitical events. And I've already had, as you can see right there at the top, 6 alerts that have hit this morning. 6. So how good did these supply and demand zones work, guys? How good did they work? Okay, let's take a look at them. Starting at the very top. This one just hit less than an hour ago. Okay, so this is a current zone I'm watching. Swiss yen. Okay, Swiss yen bounced into this. This is a 4-hour zone, a 2-hour zone. Sorry, guys, 2-hour zone. So you see this indecision candle right here. Now there's another one below. So I don't know that, who knows how strongly this one will hold, because there's an inefficiency right below it at the origin of this move up. See that? That's like a double bottom or a triple bottom if you kind of add in this zone or this support over here. Okay, we already had bounced on Thursday off of this zone at the bottom and pushed up. So this is a zone that worked out, but it's old news at this point, so we can't use it anymore. So I'm just going to go ahead and paint that light green. And I like to leave zones for a little while like this on my chart, just so that I can visually see. If I'm paying attention to these zones over here, it's nice to know that a zone that I drew up recently hit and bounced nicely. It just helps me to know that, hey, we're still looking pretty good as far as going in the uptrending direction, for example, on this asset. So it makes me a little more, a little better, a little more excited about these zones, because, hey, the zones are working. Zones are good. Sometimes zones don't work. Okay, it's just like any trading strategy. Okay, nothing works 100% of the time. You guys know this. But for me, it's just nice to see recent zones working because it makes me feel confident, just that little extra bit confident about the zones I'm currently focusing on. So right now, obviously that one worked out nicely. We're getting another bounce from some zones. We've had this big drop on Swiss franc like I like to see. Okay. And this makes perfect sense why Swiss yen would drop, because the Swiss franc, okay, Swiss franc is a safe haven currency, right? Swiss franc, Japanese yen, US dollar. Okay, those are your main safe haven currencies. When it comes to things like the British pound, the Aussie dollar, British pound, the euro, the Aussie dollar, New Zealand dollar, okay, those are more risk on assets, right? Emerging market currencies, as they call them. So those are currencies that don't really perform the greatest when we have geopolitical black swan events like what we've had over the weekend. Okay, that the throwing around of bombs, it's more of a black swan event. Yeah, we kind of knew about it, but nothing's guaranteed until it actually happens, unless it's President Trump, right? Okay, he didn't hide this. Okay, when he dropped the bombs on Isfahan and the other two sites, the nuclear sites, back in the summer of this past year. Now, the summer for me, obviously in the States, I know that's different on the southern hemisphere of the world. The winter for anybody on the southern hemisphere, right? But when he announced that last summer, he basically gave the same deadline. Hey, if you don't make a deal in 10 to 15 days, I think the numbers were about the same. Maybe they were a little different, but he basically gave the same ultimatum. Make a deal within 10 to 15 days or else. But what happened last year and what happened this year, that he did the exact same thing. He didn't wait. He didn't wait for that full 10 to 15 day deadline. Okay. When they dropped the bombs Saturday morning for me here in the States, or Saturday morning for you guys across the sea as well, but late, I should say midnight, basically 12:30 a.m. my time is when the first bombs got dropped at Iran. That was only 9 days. That wasn't the 10 to 15 days. Okay, so he may give a deadline, but just because he gives a deadline doesn't mean he's going to go strictly or 100% by it. He reserves the right to change things, right? That's a president for you. But anyway, black swan event. So something that happens out of the ordinary, even though it was basically announced. So anyway, just looking at our items that we want to base. This is a generalization, guys, when it comes to events to watch out for. So what are currencies to be cautious about? I already mentioned it. Euro, British pound, Aussie dollar, New Zealand dollar. Those are currencies that I'd be a little afraid to be buying right now. And if anything, selling. Okay. What are our safe haven currencies that we could potentially look to buy? Swiss franc, Japanese yen, US dollar. What about oil, guys? Oil, it's going to be a big spike up. Okay. We had, as soon as the markets opened yesterday for me here in the States, oil shot up like crazy. Let's go take a look at that real quick. Oil. Okay. I think it was like $8 a barrel. It spiked upon the market open, something like that. Let's go look at it. Oil. Here we go. There you go. Okay. So the Friday close was down here. In the open yesterday, 11.5% up. So that's $7.75 a barrel. Okay. $7.75, $7.73, basically. So that's what you call a strong gap up. And this is exactly what I was expecting. If we get a spike up like this, like we did, I mean, I wouldn't be wanting to turn around and buy that. It's FOMO at that point. You want to buy an asset that moved 11% in 2 seconds? No, thanks. I want to wait for this retracement. Now, you guys see I've got some demand zones drawn up down here. That's what I'm after. I'm not after trying to buy this, because look what happened up here. Think about these buyers up here. Let's go to a 1 minute chart. 1 minute chart. Look at this. Okay, so when price opened, there was an immediate, see that wick? some buyers in there. There's buyers in there, and then what happened? Price just falls down. How much did that drop? Okay, at one point it dropped 5.3%, $4 a barrel, just from those handful of buyers up here. But then right here you have buyers. Okay, you got buyers here. You got buyers here. I'd be afraid if I were them, because as always, what do gaps like to do? They like to get closed typically, right? This is the things like this is what blows people's accounts. Okay. Now these buyers right here are feeling pretty decent right now. But what about these buyers up here? Probably not feeling as good. What's going to happen if price rolls over on them and completely closes that gap? These people up here that have been buying are going to be out some money, right? That's not where you want to be. This is too expensive. Buying up here, in my opinion, is too expensive. Okay? We haven't had any unfilled order bounces yet, or any demand zones. That, for me, that's down here. And always, you guys remember, there's 1,001 ways to trade. There may be, I think all trading strategies go out the window when we're up this pricey on a gap up. Would you guys agree? Yeah, Zambezi, thanks a lot, man. I've been working hard for this position. As long as I get this position, that changes everything for me. That'll, I don't want to put the cart before the horse, but I'll have to speak it into existence, right? Positivity, positive thinking. I read a lot of books on it, on the subject, so we're utilizing it hardcore. But yeah, they basically said that they're cool with what I do, and then I just, I'll be able to still do my live stream, and it's not a conflict of interest. In other words, if I do other projects, so excited about that part. I can just get up, do my streams, write up the articles, videos, and things for the company, without a hitch. And most importantly, get my bills covered. That's all I'm after, guys. But I enjoy the work. That's the thing. That's why I applied to them. I love streaming. I love content creation. I love helping. I love writing up articles. Never thought I would, but I actually do. I started doing it, mainly with Ola Prime, and I just actually found a love for it. So it's exciting stuff. So anyway, I don't want to put the cart before the horse. I have to talk to their news desk managers tomorrow. Okay, so we'll see how that goes. So prayers up. All right. But yeah, let's go look at my alerts, guys. So this is Swiss yen. So far this one's working out. Okay, this one's working out so far. Now I need a 1 hour candle close, so it's basically another 45 minutes. I need to see what happens. So far, this is shaping up to be a good look. Now it's not quite hit the 200 EMA on a 1 hour, but what about a 15-minute? Okay, on a 15-minute, we have actually pierced the 200. So this is more of the scalp entry. Now, if I were to, I'm developing the trust in the 15-minute time frame, but I feel really good about the 1 hour time frame when it comes to this backbone strategy, this new strategy that I added from my 4-day class. Again, it's just a filter. It's mainly, for me, it acts as a filter because I already have an established trading strategy, obviously with the supply and demand strategy and fair value gaps, and as far as showing strength on my zones and the master pattern, making sure I'm buying under fair value. Okay, there's a few other things I do that I don't really push too hard onto the streams, but anyway, so far it's working out. I mean, I could hypothetically go ahead and place a buy order here now, because on a 15-minute time frame, we got the pierce into the demand zone to collect unfilled orders. This is after we pierced the 200 EMA. We got, look at those wicks. Those are very strong, rejections by the buyers on 2 candles, actually. So I could have gotten into this trade already just because we started breaking these structures up here, but I'm not quite certain I want to do that on the first day after a black swan event. So I'm going to probably stay away from the 15-minute time frame, the more scalpy time frame. I'm probably just going to do that and stick with the higher time frames today, or at least until after the actual New York City Open, the New York Open, the Eastern Standard Time, New York City. I kind of prefer to wait until that happens so that I can see maybe an hour or so of price action for all these assets after the entire market's open, the main market, guys, right? The main market's not even open. Talking about the U.S. stock market. So yes, we're in currency land. Yes, we're in, index and gold, silver, Bitcoin, all that. But I personally would feel more comfortable after seeing the price action after that first hour of U.S. hedge funds on Wall Street getting in there and doing their thing. Because right now, okay, starting 20 minutes ago, that's basically when New York opens as far as their pre-market, if you will, scoping things out, looking to start positioning themselves for the market to open. So that's all going on as we speak. That's for stocks, futures, all that kind of stuff. But that's the whole market, every asset, every stock market, currency market, commodities market, futures market, crypto market, everything is intertwined in one big machine. Okay. Every asset is just one little cog in the machine, if you will. Everything's connected is the point. So with the Black Swan event over the weekend, I personally am a little cautious, a little hesitant to be getting into any trades right now, just because I want to see what happens at market open. Does that make sense, guys? Does that make me a scaredy cat, or does that make me smart? You guys tell me. Okay. I've been trading for 12 years. And in 12 years, that's really not enough time to see a lot of these Black Swan events. I saw the flash crash when it came out. I was actually in a Forex class when that happened. I was in and another one when Switzerland depegged himself from the dollar. You guys remember in 2015, it was 2015. Yeah. 2015 when they depegged from the dollar and everything just went crazy with the Swiss related currency pairs. It knocked out the largest Forex firm in, I believe, New Zealand when that happened. They went insolvent because they were heavily leveraged at that point, from what I understand, from what I've read, against the Swiss franc, and the Swiss franc spiked like crazy. Okay, spiked. So because of the $1.20, I believe it was $1.20 peg for the dollar Swiss, if I'm right, I'm not mistaken. So $1.20 was supposed to be the support, and you had a lot of high leverage buying to the upside. Well, they pulled the peg, and 120 was no longer the floor, and it just sunk. Okay, tore up a lot of people. Again, the largest Forex firm from what I understand, the world in New Zealand went insolvent just like that, just because they were heavily leveraged the other way. So I just want to see what happens probably that first hour after New York opens, as far as hopping into trades. I like what I see right here on my chart. This looks really, really nice, but I just want to see what happens when they open. Okay. That's just my risk tolerance. That's my risk tolerance. But anyway, so far though, the zone is holding up nicely. Okay. Let's take a look at some of these other ones. Okay. Here's pound Swiss short opportunity. We've bounced into the 200 EMA on a 1 hour chart. We have bounced obviously into the 4 hour supply zone. And our RSI is overbought. We're over 80. So one could look at this. If we get same thing, we're getting wicks on this one too. I mean, if we get a bearish candle, that could be a very nice entry short. Okay. Looking at the technicals here. Obviously, I would need to match it up with my edge finder, but just looking at this from a technical aspect, yeah, it looks good. Let's go look at what else I got here. Pound yen. Okay, this one has not worked out. Let's see here. And that's because we bounced into a daily. See, we bounced into, and also this is actually this is a daily and a 1 hour demand zone too. See this right here? See that bounced right here. So because it bounced into a higher set of time frames, that negates any smaller time frame zones. That's why it's blowing through this one without like a hot knife through butter. Let's see, what did I say that was? Pound yen. And pound yen also is giving us a neutral signal. Okay, look at that, straight up zero. So when we get these neutral scores, again, that just makes these demand zones and supply zones a little less exciting. Now the higher time frame zones, they're a lot better. I mean, as you can see, look, we got a straight up zero score, and it just simply drops into this higher confluence zone and bounce up. So yeah, that negates this zone up here, 210.62. Okay, so that's pound yen. So no bueno on that. Just delete that, get it out of the way, and we know to ignore this. So yeah, again, zero. There's nothing I can do with it. There's nothing I want to do with it because it's neutral. CAD Swiss. Let's see, 56 half, 56. Yeah. See, I had a zone kind of drawn up over here. Look at that, just hot knife through butter. Just choose right through it. Black swan events don't care about supply and demand zones or any other trading strategy. It's going to gap. It's going to go crazy. In this case, we gapped down and then totally faked everybody out, guys. Look at this. This is huge. This may not look like much. That's huge. Okay. When the market opened, we gapped down quite a bit. That's a lot. That's a decent sized gap for a CAD Swiss. I mean, what's the ATR? How many pips a day does this asset move? It moves. Oh, what the heck? Where's my numbers at? Where's my values? Hold on a second. I don't know what my numbers aren't showing up. Oh, well, never mind. Yes. Hold on. Oh, what's going on here? Average true range. Why is my numbers not showing up? Huh. I don't get it. For some reason, my numbers aren't showing up. But anyway, 37 pips, guys. That's how much this moves. So that's not many pips. But when the market opened, it gapped down over half of the ATR. Okay, that's a lot of interbank activity over the weekend for all these currency pairs. But especially for something like that, small ATR, it's 20 pips. It gapped down 21 pips on an asset that only moves 37 pips a day. Okay, so that's easily a reason why people would be wanting to short here. A FOMO move, right? A FOMO short. And then what happened? The rug got pulled on them to the upside. This is why you avoid high impact events, or in this case, geopolitical events, until you see the market do its thing for a while, balance itself out. So that's CAD Swiss. What about Aussie CAD? Look at this one. Look at this ugly gap. Look at how many demand zones it did not care about here. There's one demand zone. There's two if you count the confluence. We'll call that one because it's the same zone. There's a second. There's a third. There's a fourth. See all these confluences down here? Interbanks didn't care. The interbank trading going all the way over. This is a 4-hour zone too. That's a decent sized zone, right? Well, it didn't matter. Black swan events, guys. This is why I told you guys on Friday. I mean, obviously, you guys, everybody could do what you do. You guys are all adults, right? But this is why I highly encouraged on not only my stream, but Trader Nick's stream. This is why I encouraged to get out of the market over the weekend, to be flat over the weekend, going into the weekend. And these are the reasons why. I mean, how many pips did it gap down? It gapped down on Aussie CAD, and this one moves a little bit better. 101 pips, guys. So if anybody had limit orders on any of these demand zones, they got screwed. Maybe not this one, depending on how wide of a stop you got, but that's pretty far away. And the spread, of course, would have probably gotten a lot of them too. This is why I wanted to be flat, because I didn't want to get in any of this crap, knowing that we could be potentially seeing a gap like that. Okay, that's what, a bunch of pips. Let's go to a daily real quick. Okay, this thing moves. Look at that. This thing only moves about 67 pips a day. and it gapped more than the ATR. So this one gapped like 1.3 of its average true range just on market open. That's why I wanted to be flat. That's why I highly encourage everybody to be flat. What about Aussie Swiss? Let's look at Aussie Swiss. Here's another one. Okay, this one gapped 75 pips, guys. 75 pips. That's why we be careful. And that's on a, oh, there's my damn number right there. 100. That ain't right. Is that right? How many? Ah, yeah. See, this one moves 53 pips on average per day. And we gapped 75 pips. So again, these are reasons why we remain flat when President Trump is basically saying, hey, we're going to come out and do this to you guys. Right? Again, he didn't wait. He didn't wait the 10 to 15 days. He waited 9 before he struck. So that's it, guys. That's basically it. So what else? So Bitcoin, okay, risk. It's a risk on asset, right? So we're in a risk off environment. So it's definitely one of those assets where you definitely probably got to be careful about buying. You probably won't want to be buying that. Again, you guys do what you want, but it gapped yesterday down here. Okay, this was where the strike started for Bitcoin. Remember, Bitcoin is one of the few assets open over the weekend. So this is midnight my time. And we just saw, I believe it was like a 3.7% decline, if I remember. 3.9% drop. Okay. About 3.7 close, but 3.9% drop. That's a range of 3%, almost 4% in one trading hour. So everybody, and it makes sense because it's risk off asset, a risk on asset, guys. Okay. We were in a risk off environment. But we got the drop and then the retracement. Well, we retraced right into a supply zone. Okay. Even over the weekend, I didn't feel comfortable with trading Bitcoin because of this, because of the geopolitics of it, the black swan. I was thinking about shorting here. I really was, but I didn't want to. I didn't want to get in. It's got to shake itself out. The markets hate change. The markets do not like change. So what does the bombs? What does that do? Presents a lot of chaos. So I just want to see like a day or so of people getting used to the fact that there's bombs being thrown around for the markets to kind of somewhat cool down, relax, chill out. But, yeah, that's just that. We just want to be careful. And plus Bitcoin's not even given it's neutral anyway. In fact, let's go look at the top setups, and then we'll take a look at the COT report here in a second. So Aussie CAD at the top. Okay, and a lot of these assets are coming back to neutral. Euro Aussie is the most bearish, and it's only a -6. So guys, Aussie CAD really is the only decent one I see here. I see a lot of 5s and a few 6s. Those are bullish and bearish. But like I've told you guys, before, I start feeling a lot better about it once we hit 7. Once we hit 7 or higher. Cheryl Kelvin, how's it going, brother? And by the way, guys, if you have any questions, please do let me know. Hey, we're all in this together, trying to figure out the markets after this Black Swan event. Any assets you're looking at, anything. We'll look at gold and silver too, because obviously gold is a risk-off asset, guys. Gold and silver thrive in chaos. You guys know this. So if it's, if we got chaos going on, a lot of people look for those safe haven assets, the flights to safety, and gold and silver are one of them. Silver probably be a little more volatile than gold just because it has conductor use, just like copper, where it's not just going to be necessarily a parabolic type move up, but a little more volatility. But yeah, in fact, let's go take a look at that while we're thinking about it. So here we go. Here is market open yesterday. What did gold do? Gapped up. Makes sense. Okay. It thrives on chaos. Uncertainty spikes gold. But again, you got to be careful about this stuff because there were people that obviously were buying up in this area. Let's go drop it down to a 5-minute. Okay. Big gap up. There's buyers in this area that probably got stopped out immediately, right? when price retraced. Again, I personally wasn't interested unless we came down to some lower down demand zones. So you guys see I got an alert set all the way down here. It's a long ways away. Anybody buying up here, right here on this candle, probably got chewed to pieces just in that 2-hour down movement. Okay. And now it seems to be gaining a little bit of traction. So is there any decent looking zones here now? Let's go look. Maybe that 2-hour candle, but it's just, to me, it's just too expensive. I mean, I probably remain set on these zones down here, guys. If we probably won't get anywhere close to this time for this, price down here, but I just need to see a little bit more time kind of do its thing. Let's go to a smaller time frame. Yeah, that demand zone there formed in Asian session with low volume. So I don't know that I'm excited about that. Yeah, I'm just going to wait, guys. See these candles down here, these big red candles? That tells me there's more institutional activity taking place down here. Okay. Which is pretty smart because as you can see, they gapped up. Market gapped open or gapped up. That's gold for you. Looking at a daily. Also keep in mind, we're kind of coming into a resistance point over here. See this 4-hour supply zone, that indecision candle? Might be a little tough to see. That candle right there. It's a very tiny real body with wicks on both ends. So what happened from that point? Price dropped like a rock. So, history doesn't always repeat, but it rhymes. It's the cliche we've all heard. Okay. So if we bounce into there, wouldn't surprise me to see it push price back down, maybe down to one of my demand zones that I've been looking at. What about silver? Okay, silver, let's go to a 1 hour. So the silver gap was not big at all. Okay, this thing gapped up, what, a couple bucks? Not even a couple bucks? A couple bucks before retracing and actually dropping further down to this demand zone. Look at this. So this 1 hour chart, this is a demand zone that got hit and bounced up, collected unfilled orders. Now, yeah, actually, let's look at this on a smaller time frame, 30, 15 minute. Yeah, I'd see. I would have stayed away from it anyway, even if there hadn't have been a black swan event going on, because this demand zone already been touched. See right here, it already got touched, wicked into that wick right there had already touched the top of both time frames, all these time frames. So that right there would have kept me out. And again, I was more excited about this zone down here. Look at this 1 hour zone. See, that looks a lot better right here. Now, the only thing I dislike is the fact we had a lot of candles to the left. That's almost too many candles for me to be excited about. Again. All right, guys, sorry about that. Hey, just so you guys do know, I am going to hop off here at 8 o'clock my time. So here in 20 minutes, because I'm going to hop on to Trader next stream a little early because he starts in 20 minutes. So I would encourage everybody when we're done here, go hop on over there. I think a lot of you already know about him. If not, I'll drop in actually, I'll just do this. I'll just put his stream on here. You guys can, well, let's do this actually. I'm going to share the website. And right here, when you go to a1trading.com, over here to the right, see up here where it says A1 live stream. If you guys click that box, then it's actually going to show you guys when we all appear. So like right here, it says 10:45. This is all in Eastern Standard Time. So this is all New York City time, guys. But you guys can just look and see when everybody is on. And the stream will actually play right here. But as far as his actual page is right here. Okay. You can just click on his lives and all of his upcoming shows. So there's today's right here, guys. You can just go to his live section and excuse me, see what time he streams, because it's different times every day depending on depending on the high impact events that are coming out. So I don't want to miss it. I want to see what he has to say right at 8 o'clock. So we'll be on here for about another 19 minutes, but I did want to give you guys that heads up. Because there's a lot going on. So again, everybody in the world right now, all the smart money, all the traders that have been around for a while, they're not jumping straight into positions necessarily right away. This is an evaluation type time period. Now, how long that time period lasts is up to every trader. For me personally, I just want to wait. I want to wait, see how the first hour or so. I want to see how the first hour of the New York session shakes itself out, because it's going to shake out a lot of weak hands. A lot of people are going to be market ordering and limit ordering the minute the market opens. There's going to be a lot of people that probably blow their accounts, unfortunately, when that happens. There's going to be people that make a lot of money too. And they're going to feel invincible, and it's going to be a bad thing. I almost feel sorry for the people that make money today on the market open when it opens. Why? Because they think they figured it out. The markets have a way of humbling us all. So that's honestly the worst thing that could happen, is the market opens and they take 5-6% out of the market right away. Because then they're going to keep doing it. The next time we have black swan events, or maybe they grow the balls to be, trading the non-farm payroll or the interest rate decision whenever they come out again. And they're going to at some point pick wrong, and then they're going to completely chew away their account, blow their account. Maybe they're in a challenge account and they're breaching it, right? Lose a lot of money from their cash account. So it's just not smart practice to be growing balls after a win like that. It's not. It's a bad formula for success. Nick and everybody else you guys see on our live streams will tell you, they'll probably echo the same thing, if maybe just reworded, but it's just an evaluation time for me, guys. Okay, evaluation time. If somebody buys at the market or limit orders at the market and they make money, is that skill or is that luck? They didn't know. Any good trader worth their weight in gold is going to tell you they don't know. Okay, we have general ideas. We have past examples to refer from, but it's not always guaranteed. Okay, like I just told you earlier, risk on assets: euro, pound, Aussie dollar, New Zealand dollar. Okay, those typically go down in events like this. Dollar, Swiss franc, Japanese yen typically go up, but that doesn't mean it's going to happen immediately. It doesn't mean it's going to happen all the time. Okay, gold goes up, silver goes up, Bitcoin goes down, U.S. indices go down, stocks potentially go down, unless it's a war-related stock, right? Some of those war stocks that provide all the ammunition, the raw materials for the bombs and the ammunition, stuff like that, they may get a spike. They're going to be the outliers. Okay, but it just is foolish. And then obviously oil going up, right? It's just foolish though to place a big order on that. Okay, we want to treat this thing like a business and not like a slot machine. That's the whole point I'm, pretty much getting at. So, let's see. Let's go take a look at. Oh, I need to get my chart shared again. Yeah, let's see here. Financial juice. I just wanted to see. I do believe Secretary of War Pete Hegseth, I think he is set to speak here shortly. Oh, I think wait, hold on a second. Oh, you know what? He spoke 45 minutes ago. So yeah, as soon as I get off of here, guys, I'm actually going to see what he had to say as like a kind of a readout. But what did he say here? Secretary of War Pete Hegseth, 4 to 5 week time frame. It could move. So there you go, guys. That right there to me looks like an extended campaign. So we could definitely be seeing continued oil spikes. Let's go look at oil again, because we'll look at it in a second. I could see oil going to $100, guys. I don't know about you. Where are we at? Okay, we closed on Friday at 67. We opened yesterday at, oh my goodness. Opened yesterday and went up to 75.3. So again, let's measure that again. That's just crazy. Okay, $7.72 a barrel. 11.5% spike. Well, basically 12%. Yeah, 12.03%, just to be exact. Okay, that was the range, the opening range. So do you think we have a chance to get to 80? Do you think we have a chance to get to 90? to 100? Potentially, if we're seeing things like this, 4 to 5 week time frame. Now he says right there it could move, but the markets don't care. The markets care about this right here, 4 to 5 weeks. Remember, Iran is threatened, and I think they already have shut down the Strait of Hormuz, which is where what is it? I think it's like 1/5 of the U.S. oil comes from the Strait of Hormuz. Okay. If that gets shut down, that's a gigantic supply shock. Less supply means higher demand, means prices go up, right? So if anybody was in an oil trade going into the weekend, they're pretty happy today. I know Nick is. I think he's in the U.S. oil position long, okay, going into the weekend. So he's going to be happy today. He'll probably talk all about it. And I encourage you guys to chime in and see what he has to say about it. What else we got over here? Yeah, there you go. FX Street, gold, safe haven bid on Middle East risk. That makes sense. Okay. Again, gold thrives on chaos. Looks like Putin and Bahrain's king discuss Iran. Yeah. Everybody's just trying to figure things out. Yeah, here we go. So that's what we'll definitely want to check out, guys. I would encourage you to check in. Again, doesn't matter if you like or dislike these guys' politics. Okay, the administration here in the U.S. Doesn't matter. Facts don't care about your feelings, but you still got to understand what they're saying. So, highly encourage you guys go check in, look up the Hill right there on YouTube, see what Pete Hegseth says. As always, look and see what President Trump says directly from his mouth on his Truth Social account. If you guys don't have a Truth Social account, again, this has nothing to do with politics. You need to know what's coming out of his mouth. Okay, when he opened up Saturday morning and mentioned about the campaign they started, and then yesterday he actually did this video as a second video for a follow-up after the first 24 hours. So, just know that you guys we got to know this stuff. Okay, we don't have to like politics. We just have to understand it, the geopolitics side of it, how each country interacts and is intertwined with each other. High impact events today. We do have the manufacturing sector come out for the PMI report here in the U.S. We've also got Governor Michelle Bullock speaking for the Aussie. Okay, that's going to be at 3:10 Central Time, 4:10 Eastern. And then later on tonight here for me, that'll be 10 p.m. my time, 10 p.m. Central. We do have Bank of Japan Governor Ueda with his lip flapping session. So, guys, look, a lot of these speeches can be boring, but on a day like today, if you haven't done it recently, if you've never listened to a speech, might be some good speeches to tune into just to see what the heck they have to say about the war. Okay? Yeah, because it's going to directly impact their currencies in some way, shape, or form. Again, Japan, safe haven currency. Australian dollar, risk off currency. US dollar, safe haven currency. Okay? It's a good idea to understand it. In fact, on that note, I want to look at the currency indices and the VIX. Look at the VIX. All right. So see, when I did my video over the weekend, I was saying I was making a guess that we could see a VIX go up to 30 because we had this kind of double top over here. All right. So we flew up to 25. Okay. Not quite as high as I thought. So that's actually not as bad as I thought it was going to be, guys. I mean, we had a big spike up. We had a big gap up on the. Now look at the VIX. Look at the volatility index is more of a fear gauge, guys. The higher it spikes, the more fearful we are. There's a ton of volatility, a ton of action, a ton of liquidity, a ton of trading action, a ton of FOMO trading, a ton of fear trading, greed trading. Okay, that's what the VIX represents. And as you see, it just spiked like crazy. We were at 20, basically 20 going into the weekend, or we call it 1986. And we opened up 24.60. That's a big move. That's a very big move, guys. That's a lot of fear. No other way to cut it. It's a lot of fear entering the market. Okay. What else we got? What about the individual indices? Now, the dollar is going to be up, which I suspected that. Okay. So that's a big open. Let's go to a 1 hour. Okay. Big gap up for the Dixie. And it's just continuing. Dollar strength, dollar safe haven currency. Okay. Let's see. Are we getting the same moves on the yen? Okay. So the yen's actually opening down. Wow. What about the Swiss? Oh, and plus, guys, those just opened. So you see this? I mean, think about it. The Jexy and the Sexy, that's the Japanese and the Swiss, which are both safe haven currencies. So you would expect to see this go up, right? This is why I say just because something should happen doesn't mean it's always going to happen. These should have opened up, but they opened down. So what's happening right now? You're getting more of the novice traders thinking that the Swiss and the Japanese yen are going down. They're going to try selling Swiss and selling yen, only to potentially get burned whenever this thing turns around. Okay, so we'll see how that goes. But what else we got? Let's go to the risk off. Okay, this is a little more in line with what makes sense. Aussie dollar opening down, British pound opening down. Canada opening down. Remember, Canada's closely tied to oil, though. So could that give the Canada dollar a boost up? We'll have to see. This is just opening minutes, or I should say, opening first hour for these indices, because they typically open around this time, about 7 o'clock my time. Okay, euro down. That makes sense. So literally, all of them are down except for the dollar. Okay, the dollar makes sense. All these others make sense that they open down. But if I had to put my money on it, I would figure that the Japanese and the Swiss indexes would probably turn around to the upside. But just because that typically happens in the past doesn't mean it's necessarily going to happen right away. Or if it does, it just may take a little bit of time. Hang Seng, hey, some of these Chinese indices over here, Hong Kong right here, open down. This is the overall regular index, by the way, not the CFDs, but the regular indices. Okay, there's your S&P. Well, these aren't even opened yet. In fact, for those, we'll take a look at the CFDs. So here you go. So here's your S&P. It gapped down, retraced a little, dropped more, retraced a little. Remember, these are risk-off assets. So it's no surprise to see them gapping down to open and continuing. There's S&P. Here's NASDAQ, same thing. Gap down, retrace a little before tanking again. The Dow, big, strong gap down. What percentage is this? Okay, gap down 0.89% on the open yesterday. 436 points down on the Dow. The S&P, obviously okay, that gap down 0.79%. But as you can see, these percentages over here, it's just growing. So let's look at the NASDAQ again. Okay, gap down up 1% at a market open. Got as low as 2% almost. And it's just steadily going down. So you got to be careful with this stuff. Russell, same thing, gap down. The Nikkei, Japanese Nikkei, gapped way down. And it's down 2.5%. It's actually the biggest loser as we speak, as far as the main indices. Okay, some of these bigger indices I like to watch. It's a lot. That's a lot. It gapped down 1.5%, over 1.5% just on market open yesterday. Okay, for the CFD world. What about the FTSE? Look at that FTSE just going down. Probably annoyed at their prime minister for just heavily explaining the fact that they're not joining the war. Like he kind of overdid it to me. I don't know. I think he's a nice guy, but I don't know. I didn't really care for his presence yesterday. Like he was going above and beyond to make sure everybody knows and understands that the UK is not a part of this. So I don't know. It just kind of felt weird. But what about the DAX in Germany? Look at this. You want to talk about a loser? Now think about this. The DAX at one point down to a neutral +3. And look at this loss. Look at this gap down. Gap and drop. This gap down 0.7%. There you go. 2.5, almost 2. So it's almost as big of a loss as the Nikkei. Nikkei is currently at 2.5% down. German DAX is 2.3% down. Scary stuff. Scary stuff. Again, we go to gold and silver. They thrive on chaos. Now the silver, interestingly, has come back down to where it opened, or I should say, come back down to where it closed on Friday. My cat's out there meowing. See, this was our Friday close right here. It's at the same spot. What about gold? Yeah, see, gold's still going crazy. Again, silver's a little more on the volatile side because it's got more uses. Okay? Gold, not as much. Gold is there to look shiny and pretty, right? But anyway, yeah, I just wanted to kind of go through some of these assets to get reactions. And here's Bitcoin. Yeah, we already went over that. So this was the beginning of the campaign down over here, this big, ugly red candle. A lot of people shorting, and then a lot of people lost their asses right here. Okay, because price very quickly retraced and then just kept going. This is why you don't trade during geopolitical tensions. This is why you don't trade during red folder events, black swan events, bombing campaigns. Okay, because you lose your ass. Typically, you lose your ass. Okay? Now, even though I didn't have the balls to get into this trade, I was keeping an eye on this supply zone right here. Okay, this is a 4-hour, 1-hour confluence, and we wicked in there nicely and started pulling away. And again, we bounced into a 1-hour supply, wicked in and rejected, and now we're continuing to drop from there. So there's a couple opportunities under normal circumstances to short Bitcoin, but not with the geopolitical flare-ups and not with the fact that, again, the edge finder is still giving us a neutral score. So, guys, that's about it. Oh, yeah, let's do this real quick. Aussie CAD, because, again, I want to get on Trader Nick's stream. And I'll be on his stream at 9:45, so in about hour 45 minutes. Aussie CAD, I believe that was it, right? Yeah, Aussie CAD, guys. This is our one good signal, and as you can see, we've blown through all the demand zones I had drawn up. This is also after we hit a higher time frame supply zone, so that's another reason I wasn't as excited about it. But the next stop, possibly down here. This would probably be my yeah. This is the higher probability setup down here. Remember, Aussie, risk off. Or excuse me, risk on. We are in a risk off environment, but Aussie is a risk on currency. So I could expect this to continue to drop potentially. Now it's got 100 pips to go before we even get down here to my demand zone. So it may not work, may not make it down, but we do have a 200 EMA coming up. Just looking at it from this 4-hour time frame perspective. Yeah, see, 1 hour, we just went way below it. So yeah, I mean, that's the highest score, guys, but I realistically don't see myself getting into anything unless it drops another 100 pips. So it might just be a sit back and relax day, guys, but that's it. I'm going to hop up out of here. I'll be back normal time tomorrow, guys. And again, you can find us over here at a1trading.com. Me and the boys. Okay, Nick typically leads the show off, and then we all kind of do some times in here, 30-minute slots. They kind of get moved around from time to time, but yeah, I'll be on. Here you go, 10:45 Eastern Standard Time. So I'll see you guys there if you guys are open to join. But with that, guys, have a good one. Stay safe out there. It's a good day to sit back and watch, guys. Today's basically one big popcorn trade of the day setup. So at market open at 8:30, I would encourage you to look at your favorite asset. Maybe look at the stock markets on a 1-minute time frame, get a bowl of popcorn, sit back, stay away from the buy or sell button, and stay safe so that you can come back tomorrow without losing your account. So with that, have a good day, guys. I'll talk to you later.